it has been about 25 years since Sanlam demutualized and listed as a separate entity. The insurance conglomerate business is now the largest non-banking financial services business in Africa and is still seeking to extend its territory through acquisitions and joint ventures. Financial Mail's Stephen Cranston joins us now with insights on the business. Stephen, thanks so much for your time today. Now, as we get started, let's just reflect on Sanlam's growth trajectory, perhaps from about 25 years ago when it did break away from Old Mutual.
Well, I think it was about, 2003 when Johan van Zyl came in. I think he kind of took the view, he changed the culture. He took the view, we're not going to be content with being the silver medalist or a bronze medalist sometimes, because Old Mutual and Liberty was ahead of them in many, many respects. And I think he brought in a sort of winning culture. He introduced English as the only language. He banned any sort of communication in Afrikaans to become more relevant to the whole country and to get out of that small comfort zone and to become a true South African company. And I think that was a huge step forward for them.
And would you say that was the turning point for Sanlam in that regard?
Well, I think the fact that Old Mutual at the same time made so many bad decisions, it took its eye off the ball. Its capital allocation was just appalling. They bought some very bad businesses all in Europe, in the United States, and so on. Sanlam stuck to its knitting, and of course, Old Mutual took a lot of their top team overseas. So Sanlam, they kept them in the house, and they made some good acquisitions, like African Life, for example. That was also fairly early in van Zyl's time, because they had lost Metropolitan. That was the big empowerment deal they did very early in 1993 under Marina Starling. So they exited the whole funeral policy market for 10 years, which was, with hindsight, a big mistake. But on the other hand, it was a very important pioneering empowerment deal, the Metropolitan sale to Dr. Matlana and his team.
Let's talk about, the shift that we started seeing at Sanlam, from where it just turned around from just being an insurance provider to now a more fully fledged financial services provider. Yeah.
Well, I think they saw the move away from sort of the old-fashioned 5-year endowment policies as a way of saving towards unit trusts, but also selling other people's products. They've got this company called Glacier. A lot of our viewers will be clients of Glacier. And that, they provide a platform for the entire unit trust industry, and they acquired a lot of credibility within the independent financial advisor market, and built up an extremely strong agency force, which I think previously was a bit of a sort of, certainly was nowhere near the prestige or the quality of the Liberty and the Old Mutual agency force. And they really professionalized it, and I think they just took everything very seriously and stayed very much within South Africa until, of course, under Ian Kirk, they were ready to expand into Africa, and that's obviously a huge business in its own right. Still very much a lot of work to do there.
We'll touch on, just how the different CEOs kind of influenced the business and drove it to even further growth. I just want to touch on, the competitive landscape within the industry that Sanlam operates in and how it sets itself apart, considering that we've also started seeing new players jump into that space.
Well, they've held up very well. I mean, you've seen Discovery, which has got an enormously powerful brand and enormously loyal supporters. You'll obviously be very familiar with Vitality. It has an enormous following, especially among younger people, and they will buy a life policy on the strength of getting their Vitality points and that sort of thing. And so they've they've seen them off, and they've got into the direct market, and they also, through Sanlam, they have the predominant short-term insurer, especially in the corporate market. Of course, OUTsurance is very, very dominant in the motor market.
It's interesting how Sanlam hasn't, dipped its fingers into banking.
Well, they've discussed it enormously. I can assure you that in their strategic meetings there will be a huge amount of discussion about that. Paul Hanratty, when he was at Old Mutual, would have had involvement in what was then called the Old Mutual Bank, which in fact was not really, it was actually a division of Nedbank, which they also owned at that stage. I think he takes the view they must concentrate on what they're good at. They do, of course, have the indirect interest into Time Bank through their relationship with ARC, and that you are going to see a lot of some developments there, I'm sure. They did have a relationship with Capitec, which ended. I don't think anybody who knows how ambitious Capitec is surprised that Capitec, once they'd learned how to do the funeral policy business, kind of ditched Sanlam. I mean, that's how they're a ruthless, competitive company. So it shouldn't have been any surprise to them.
Let's talk about that expansion into Africa. I mean, a number of South African countries barely even make it there. They come back with, their hands between their legs when they do go out into Africa. But it does seem like, Sanlam is faring quite well that side.
Well, they did buy this company, Saham, all similar names, in Morocco, which was already a very, very well-established business. And more so in terms of the short-term insurance business than in life. They've now, of course, got the relationship with Allianz, which is pretty recent, but it's an unofficial joint venture. It's enormously complicated in terms of the number of countries in Africa, the different regulators in each country. And there's a lot of work to be done from what I could see in terms of their slides at their presentations. They're hoping some of them won't be properly registered in the Sanlam Allianz joint venture until the end of 2025. I mean, there's some big markets like Nigeria where there's just a lot of work still to be done. But Sanlam and Saham already had a pretty established relationship market in North Africa and in Southern Africa. So.
I mean, we could talk about Sanlam for hours and hours. It will be really interesting to see what the next 25 years holds for the company. Stephen, unfortunately, we've run out of time. That was Stephen Cranston, freelance writer for the Financial Mail.